Cyprus has been getting quite a lot of attention lately when it comes to their immigration programs after they have discontinued their citizenship by investment. It would be good to remind ourselves about the special tax regime in Cyprus and what advantages it offers. Hello everyone, my name is Tiana and I have been a part of the strategy team here at Nomad Capitalist for several years, where we have been helping high net worth individuals reach their goals, acquire holistic plans, and change their life from immigration to their finances to asset diversification. In today's video, we will focus on the special tax regime in Cyprus. As one of the few countries in Europe that offers a non-dom tax regime, which means that it is a special tax regime for those who are not domiciled in Cyprus, there's quite a few advantages that you might not have known of. So if we talk about the corporate taxation in Cyprus, it is one of the lowest in Europe and it is one of the lower worldwide. If you're looking for a country that has a very long list of double tax treaties, if you have a business on the ground in one of the high tax countries like US, UK, Australia, Cyprus could be a great choice. In order to become a tax resident of Cyprus, there are two routes. So one route is essentially just moving to Cyprus, spending 6 months in the country, and then taking advantage of the tax system. But for those of you who actually like to travel, be in different places during the year, or simply just don't like being restrained by certain rules of spending 6 months in a country, then the 60-day rule in Cyprus might be the right thing for you. The special tax regime in Cyprus is available to both EU and non-EU citizens. The main difference is the type of residence permit you are getting when moving. Of course, the process is a lot easier for those who are EU citizens because of the ease of movement within the European Union. But for those of you who are not, it will not be too much of a more complex situation. So in order to take advantage of the 60-day rule, what it means is that you have to spend 60 calendar days during a calendar year in Cyprus on the ground. Besides that, you will have to incorporate a business in Cyprus and you will have to become the director of said company. When it comes to the taxation in Cyprus under this specific rule, it entails that there is a corporate tax rate of 12.5%. For those of you who are trying to take advantage of this in order to reduce your taxation in other high tax countries, that will entail that from the high tax in the US or UK, even if you're doing business on the ground, you can be paying 12.5% instead. The non-dom taxation in Cyprus will entail that you are only taxed on your income that is derived from Cyprus, which means that any of the foreign income, any businesses you have outside of the country, that income will not be considered taxable. When it comes to foreign salaries, capital gains, royalties, interests, all of that is going to be tax-free. In addition to that, there is a progressive tax rate on the local salary, which, since you will be the director of the company, will be receiving. Now, when it comes to the salary, there is an exemption of 19,500,000 euros per year that is exempt from taxation. However, the dividends are tax-free. So what you can do is take out your tax-free allowance for the salary and the remaining in dividends. The local taxation goes further to capital gains on the sale. The only other taxation would be on capital gains on the sale of property located in Cyprus. So only the properties you own in the country would be taxed on capital gains, while other properties that are outside will remain untaxed. So to dive a little bit more into the criteria in order to take advantage of the 60-day rule, initially you will first need to not reside in any other country or state for more than 183 days per year. So even though you don't have to spend 6 months in Cyprus, you will not be able to spend more than 6 months in any other country. That is another thing that everyone has to pay attention to. So when you're structuring your life, each country has their own rules. So let's say if you're not spending more than 6 months in Canada and you have a tax resident in Cyprus, you will be only the tax resident of Cyprus. However, there are countries where if you spend more than 90 days in the country at a time, let's say in Belgium or Switzerland, you are legally required to register yourself as a resident in the country, which entails that you become a tax resident. And besides these countries that are based in Europe, that would be the case in several Latin American countries, Asian countries. You have to be very careful when making choices on which countries and how much time you want to spend in each one of them. This is why if you want to take advantage of the 60-day rule, you have to plan everything accordingly to every country's rules separately. So once you obtain the special tax status in Cyprus, you will have to renew it every year. And one of the requirements is showing proof that you're no longer a tax tax resident of the country you resided in before. So this is where it is quite important to make sure that the actual process of departing from the previous tax residence is done properly, and that you actually have a proof, a documentation that will prove that to Cyprus as well. Because without this critical piece of paper, Cyprus will not be able to award you special tax regime status. In addition to 60 days you have to spend in Cyprus, there is going to be additional ties you have to create to the country, because this country will be your permanent place of abode. It entails that you will have to rent out space, an apartment in Cyprus throughout the year. You don't necessarily have to reside there, but you cannot sublet it. So it has to be considered your main home. Besides this, of course, you will have the employment as a director of your company. That is going to be an additional tie. But also, if you have a family, it would be good if the family would reside in Cyprus alongside yourself. In addition to this, there's so many ties that you can create, even if you're only spending 60 days in the country. It's easy to get gym memberships, library cards, etc., in order to maintain that presence in the country and the closer ties. If you're not just a business owner, if you're a retiree who would like to actually settle down and retire in Cyprus, you can also take advantage on your pension that you're receiving from another country. Under this special tax regime, Cyprus will be taxing you a flat 5% rate on your pension. And again, given the fact that Cyprus has an extensive list of tax treaties with different countries, it is quite possible that your pension will not be taxed in the country of origin if structured properly. So as you can see, you can take advantage of Cyprus and many programs it offers, starting with immigration to the actual special tax regime. However, keep in mind that it is not as simple as choosing you will go to Cyprus. You have to make sure that all parts of your planning and departure and getting to Cyprus will work well together, because sometimes they don't. Thank you for watching this video, and if you have any additional questions, feel free to leave them down below. And if you have any questions, or if you would like assistance with moving to Cyprus and doing so properly, make sure to visit our website and apply to become our client. Thank you for watching.